Gives me great pleasure to present the Vukile FY results to financial 15, to the results to end March 2015. We're very happy to report an 8.1% growth in full year distributions. The second half had a very strong momentum, up 8.4%, but for the full year, investors will get 136.8 cents per unit, which, as I said, is an 8.1% growth. The year was a very strong year for Vukile overall, and aside from meeting our guidance in numbers in terms of the 8.1% growth, we were able to achieve a lot of strong operational improvements. Our vacancies dropped to 4.6% from 6.2% in the prior year. We had positive reversions across all three sectors, with retail being our star performer at 10.8% positive, and our lease expiry profile has pushed out comfortably, where around 33% of the fund is now expiring in 2019 and beyond. It was also a very strong year of delivery for us in terms of our overall stated strategy, and we've historically spoken about Vukile looking to grow the fund to assets of around 10 billion, being overweight the retail sector and constantly improving the quality of the portfolio. And if you look at what we've achieved in the last year, we've really surpassed those targets. So the fund is now sitting at assets of around 13.6 billion. 64% of that is now in the retail sector. And if you look at the metrics around average value per property, value per square meter, you see very healthy growth of at least 75%, sometimes over 100% in all of those key metrics. So we feel we really have delivered on that overall strategy. We have further growth coming through post year end. We have a very healthy pipeline of around R1 billion worth of assets that are all unconditional. They have either transferred in the beginning of April or are due to transfer probably within the next 2 months. That will take the value of the portfolio up to 14.7 billion, and that will have a 70% retail content. So you can see how we really have delivered on our strategic intent all in all. Throughout this process, Vukile has adopted a very conservative stance in terms of funding. We have a gearing ratio of 28%, 88% of our term debt is hedged. We really feel it's important to keep a more conservative approach and balance sheet capacity into what may well be a rising interest rate environment. Another one of the highlights for the year was finally closing the Synergy transaction. That's been the source of much coverage in the press. We now own 65% of Synergy. We own 88% of the B units and 12% of the A units. And we also now have management control of Synergy, having acquired, as of the 1st of May, the management company of Synergy, Capital Land Asset Management. And this is now therefore the finalization of our strategy to take over Synergy. That's brought 2.4 billion rands worth of assets into Vukile. It's all retail, all lower income, and really very much aligned with our overall operating strategy. And our intention with Synergy going forward is to keep it as a listed vehicle, to keep the A and B unit structure in place, and to reinvigorate Synergy by giving it its new unique strategy, and to hopefully see that as a new growth vehicle in the market. We're currently evaluating a number of strategic opportunities there, and hopefully we'll be in a better position to talk to the market in around 2 to 3 months as to what the strategic direction of Synergy will become. In terms of the year ahead, I think we are concerned about the state of the economy, the low growth, the lack of job creation, the impact of Eskom through both load shedding and tariff increases, and the impact that has on tenants in terms of their total cost of occupation. Also a bit concerned with some rising unrest, civil unrest we've seen in some areas, and obviously the spectre of interest rates rising as well at a later stage in the year. When you look at the macroeconomic picture, then I think it's a difficult environment. But when we look at it from a Vukile point of view, we are very confident that the company is well positioned to handle the economic environment and to deliver growth in the year ahead, probably similar to what we've delivered in this previous year, growth in the region of 7 to 8%, whilst remaining very conservatively geared and hedged. Vukile really is aiming to be a long-term sustainable player, delivering growth to unit holders, to shareholders over the long term, with a premium low-risk portfolio with high visibility of earnings, and therefore making it a premium investment opportunity.